Mark, we are live now.
Thank you. So I'd like to welcome all councillors, officers and members of the viewing public on YouTube to this meeting of the Corporate Audit Committee. My name's Councillor Mark Elliott and I'm chair of the committee. I'll now call out the names of the other members of the committee and ask them to confirm that they're present. So if you can unmute, confirm your presence and then mute again just as I go around the list of names, that would be great. So first, Councillor Andy Furs, who I think is not present.
He's not in.
Okay, hopefully he'll turn up. Councillor Colin Blackburn.
Present.
Councillor Barak Pankania.
Present.
Councillor Brian Simmons.
Present.
And co-opted member John Barker.
Present.
And I'm going to come back to Councillor Andy Furs, who I think has just turned up. Present?
Yeah. Present, I'm here, sorry, yes, yeah, just arrived.
Also present are officers who will introduce the reports as we make our way through the agenda and representatives of the external auditors. Can I remind members and officers to keep background noise to a minimum, to only speak one person at a time and not to speak over others. Please mute your microphones when not speaking and then unmute when I invite you to speak. Please indicate if you wish to speak by using the chat facility on Zoom by typing MIS, may I speak, and I will call you to speak in turn. If a member of the committee has to leave the meeting, then please draw my attention to this by using the chat facility. If you subsequently return to the meeting, then please also draw my attention to this in the same way. Members should also inform me if they lose their connection and miss any part of the meeting, as this will result in them not being able to vote on any item that they did not hear in full. Should the committee need to take a vote, I will read out each member's name in alphabetical order. Each member should then clearly state for, against, or abstain. This will enable the Democratic Services Officer to accurately record the vote and will also ensure that decision taking is clear to the public who are viewing on YouTube. Anyone have any questions? Nope. Good. Lovely. So we'll work through the agenda. Item 2 of the agenda is election of vice chair. I don't believe we need to elect a vice chair for this meeting. So we'll move on to item 3, which is apologies for absence. Do we have any apologies, Jack?
Thank you, Chair. No, I have not received any apologies. I think we also have all of the officers who will be presenting item. Yes.
Yeah, we do. Councillor Pankania is present as a substitute for Councillor Hodge.
That's correct, yes.
Yeah, lovely. Any declarations of interest to be made? That's a no. Urgent items of business agreed by the chair. There are no urgent items of business. And item 6, items from the public. And there are no items from the public notified. Item 7, items from councillors and co-opted and added members. And again, there are none of those. So we're on to item 8, which is the minutes of the last meeting. You should have all had them circulated. Is somebody happy to propose those as an accurate record?
I'm happy to propose those, Chair.
Thank you. Proposed by Councillor Andy Furs. Anyone willing to second? I'm happy to second from the chair if we need to. That's fine. I will do that. I don't think we have to vote on that. Proposing the second is enough, isn't it? Yeah, that's fine. Good, lovely. So those are confirmed as an accurate record. So we're on to the first substantive item, which is item number 9, the COVID-19 financial recovery update. So I'd like to invite Andy Rothery to give a brief overview presentation.
Thank you, Chair. I'm just going to start my screen sharing, so bear with me. Okay, could someone just let me know you can see that?
I certainly can.
Yeah, I can.
Brilliant. Okay, so I've put a few slides together. This is to really give a overview of the 2021 impact of COVID-19 on the council's finances, and this is really related to the recovery report that went to cabinet on the 2nd of July. So just starting off, I think what I want to say first of all is, in Baines, all councils and I think all businesses have had a significant financial impact of COVID-19. In Baines, it has been unprecedented. That's largely due to our reliance on income as a council. So our financial impact across the whole council, including council tax also, is forecast to be up to 50 million. This is from an early assessment, and that is largely due to our reliance on income. We benchmark as the highest income generating unitary authority in the country when looking at gross budgets compared to income generated. So breaking down that 50 million financial exposure in a bit more detail, largely 32 million is projected loss of income across our heritage services, commercial estates and parking, and that's primarily due to the COVID-19 restrictions coming into play from March and us not being able to generate the planned income levels in line with our business plans throughout the restriction period. This does factor in-year recovery, so that's the annualized impact of loss of income. Also, as a result of COVID, we've had significant pressures on expenditure budgets through really additional cost pressures in social care. Also, our providers, so our leisure provider, through supply relief, they're having financial difficulties, and through the Cabinet Office guidance, in circumstances we provide supplier relief, and also having to do new things, so providing essential equipment to our own staff and also providers and businesses across Baines, so significant costs through sourcing PPE for the region through our emergency planning work. Also, there's financial impacts on our collection funds, so we are seeing a projected reduction in collection fund income and also business rates income, so this equates to 7.5 million. So financial recovery is critical for us. Really, our recovery is needed for the council's finances, but also we have a role in encouraging financial recovery across the region to ensure that our local economy can start to bounce back also. What this leads on to is the national position. So due to that level of exposure, very early on, we calculated, that financial risk and have been very active in terms of making the Baines position known to MHCLG. So myself, the Chief Executive, and the Cabinet have had a number of meetings with MHCLG and also government ministers, and they are fully aware of the financial exposure risk in Baines and our unique position. In addition to that, I've worked closely with Section 151 officers in the west of England to really produce a joint picture, because we're not alone in terms of council financial exposure. So it's really important to make the west of England impact known to government also. So the government responses to date are listed in the presentation. So in terms of unrestricted grants, this is a grant to all councils to use across a range of services without restriction. That equates to 3.7 billion. And also there has been specific government grant of 1 billion, that's to all councils. So the Baines allocation for those two grants is 11.3 million and 3.3 million. For us, a lot of that grant helps us address some of the additional expenditure pressures. It doesn't address the income exposure. More recently, though, after I think a number of lobbying and conversations with MHCLG, there has been a further support package announced. So we are waiting the details for this. It does recognise income lost to councils. This is on irrecoverable income through fees and charges, so it does not include all income and does not include commercial estate income. That will result in a claim once we have the detail behind this, will allow us to recover 75p in the pound of our lost income. In addition, government has produced a package to help the region more generally. So there has been, for Baines, 46 million of grant support to businesses that has now been fully administered, and also a council tax hardship fund of 1.3 million from a 0.5 billion national allocation. We are continuing the conversations with government, and also been very clear about some of the unique issues we face in Baines. But I think that the key thing is us also really taking a grip of this situation and focusing on our recovery and what measures we need to be putting in place ourselves. So the next slide covers the approach we've taken. So very early on in the process of us fully understanding and risk assessing our income exposure and other cost pressures, we developed 3 scenarios to enable financial planning. Now, the red scenario was predicated on what we knew at the time, because this was produced back in sort of April and made to enable our financial recovery plan to be developed for the in-year budget pressures. So the red scenario was based on a government grant of 12.5 million, which for this scenario would lead to a unmitigated, and by unmitigated I mean that's the limit of government support, so we would have to mitigate 30 million deficit. The amber scenario is a 25 million government grant, leaving us 17.8 million of mitigations to balance our 2021 budget, and the green scenario would be a 37 million grant, so government fully funding 37 million of our pressure, leaving us 5.3 million of mitigations to find ourselves. So each of these different scenarios are very, there's a wide range between them all. What we planned for was between the amber and red, because the likelihood in advance of the further supports that we've now got was that we were facing an up to 30 million deficit. And that means some pretty significant stuff in terms of service planning. The focus has been on stabilising the in-year position. To the right, there's a number of things that need to be considered in this sort of situation, which includes removing departmental spending and authority to enter into new expenditure, looking at our statutory services and scaling back the offer of our statutory services, and also looking at holding vacancies, restructuring and redundancies, and also stopping non-expenditure expenditure. That's the red scenario, and that's the scenario we really want to avoid. But there are significant things in the amber and green scenarios also, including deprioritising our capital expenditure and reprofiling the delivery timetable, and also looking at scaling back contract spends and a number of other measures. And the green scenario leads to things that I'd say are more normal for in-year budget measures that are that happen every year, which is around director mitigations and general service mitigation plans. To enable us to develop our recovery plans very early on, we increased our governance. So as we went into the lockdown as a result of the pandemic, the frequency of council management meetings increased dramatically. We went from fortnightly and monthly meetings to daily meetings to understand the situation, and also increased our briefings to the leader and deputy leader to ensure that we can keep the cabinet abreast of what's happening, because things are moving very quickly. And also I increased my frequency of finance management meetings to daily in the first few months, and then we started to decrease. And also increased frequency of budget monitoring. So we're now doing budget monitoring on a monthly basis rather than a quarterly basis. We're keeping the quarterly reporting to cabinet, but for internal purposes, we're doing monthly monitoring. And new groups were also established to deal with the pandemic and also our financial situation. So we very quickly established emergency planning meetings and also a business continuity group, alongside a more recently formally established recovery board and renewal board to manage the ongoing management and future management of how we need to respond to the pandemic. And there's also been a successful mobilisation of community hubs to support our residents. And also we quickly mobilised the support to businesses to enable the grants to be awarded. This slide summarises a result of that work, and is also the summary of the recovery plan to cabinet that shows that our projected revenue budget deficit was 42.13 million, Our recovery plans total 20.7 million. These are in-year measures. I think I want to just make that point. Lots of these are one-off recovery measures to help stabilise our financial position and ensure we can fully fund our outturn with this additional deficit and loss of income. And this does utilise the 11.3 million of the government grant we've had confirmed, and also to fully fund our 2021 budget. There is now an agreed allocation of reserves, our unearmarked reserve, and also financial planning reserves. So this shows how we can finance that deficit. There is significant recovery measures that are now being taken forwards. The welcome news that we've had really is, since the report was taken to Cabinet, is the announcement of the income reimbursement scheme, and that will allow us the opportunity to revisit some of these plans and take any changes through further updates to Cabinet. So I think I've touched on some of the slides about the in-year mitigations with the recovery plans and the income reimbursement scheme. I just wanted to close off the presentation saying that our planning has very much looked at stabilising the 2021 budget, but we are also doing significant work rebasing our medium-term financial strategy, because we are mindful that the recovery of income to the levels that we had pre-COVID, it's going to take a lot of time, and we're looking at our business plan revisions needed specifically in heritage services and parking services to reduce our reliance on income, to flow through what that change means in financial planning terms, so we can set a future year's budget strategy that addresses that to deliver a balanced budget. And that will rely on income diversification and also looking at wider recovery measures across the council. So that brings me to a close of the presentation. So I'm going to hand back to the chair and take any questions if the panel have any.
Thanks very much, Andy. So if you'd like to speak, please use the chat function. Request using MIS in the chat function. I've got Councillor Andy Furs, and then we'll go through anybody else who wants to ask. But Andy.
Thank you. Thanks very much, Chair. Welcome to the Chair of Corporate Audit. Welcome to you, Mark. Well done. Right, so I've got 2 points really. One is, I know I exchanged emails with you, Andy, and I'd like your view on it regarding grant fraud and sort of any fraudulent activity and audits that are going on to mitigate and understand the limit of that. I know we've had an email exchange, and something that I think I copied in Mark Elliott as well too, so it'd be worth sharing that. So that's point number one. And point number two really is directed probably to the external auditors, whether they're willing to offer any view. But the last, well, one of those last slides when you talked about in-year mitigations, the 11.3 million government grant, which is welcome, the £20 million or £20.7 million of cost savings, which will have its challenges. So I'll be interested in understanding the external auditors' view on whether they are deliverable. And I know it's probably early days for them to do so. And thirdly, and probably more importantly, is the use of the 10.13 million reserves for a rainy day. And I know this probably is the rainy day that they are for. But again, I'd like their view on that and how maybe we compare across our sort of equivalent unitary authority. So 2 points there, one to you, Andy, and the other one to the external auditors. Thanks.
Okay, Andy, do you want to take that first?
Okay, just for clarification, Andy, was the question for Andy Cox or myself on the grant fraud? Because we've both been working on this one.
Probably either or both of you. I just like I think it's right. The committee needs some assurance that we are not giving grants out to fraudulent requesters, if that's the right term. Okay,
Andy, shall I kick this one off and then hand over to you just to rely on some of our conversations prior to mobilising the grant scheme? I think the first steps that we're very mindful of is fraudulent claims and ensuring through the application process that we put good control measures in place around identifying valid and operating businesses, and also identification, checks for that business owner to make sure that it was the correct claimant when we processed the actual grant itself. Now we've administered a lot of these grants, we are also now starting to do the independent review to look at ensuring that each of the applications has been processed correctly. So Andy's team is starting to do that work also, and Andy might be able to give a bit more detail about that work.
Yeah, certainly will. So we got involved very early on in this process when the information came out about the grants, and we liaised with all the relevant officers about giving advice about the control framework that they needed to introduce. So we provided that advice, and at the time we also said that we were very happy to assist in supporting any sort of data analytical work that was required. There were a number of tools available which we could use, which was a Cabinet Office Spotlight tool they offered. There's also information you can use directly by going into Companies House. And later on, there was a bank account verification tool made available through the National Fraud Initiative. And that was really linked to a tool which was devised by Experian and the UK banks. So we offered us to do that. So basically they've introduced the controls that, this is what I've been advised, they introduced the controls that we advised at the time. And Andy's also just referred to an audit that we're just about to start to actually look at the processes that they've used and also look at the records management, because it's going to be very important in terms of not only what we've paid out and that we've paid it to the correct people, the eligible people, but also that we've got proper records of who we've actually paid out and when we paid out. So we're going to carry out a review there. So that's the first piece of work. The second piece of work is very much about post-payment review and verification. So I spoke to you, Andy, Councillor Firth, about that back in our telephone call back in April. So we have already carried out some of that, and that has been focused predominantly on the discretionary grants, which is a smaller sum. And what we've done there is liaise with some of the WECA authorities, and Bristol have taken the lead in terms of doing the data matching, the interrogation work. So we've provided our data on discretionary funds, and they've basically data matched that to the other councils in WECA on their discretionary payments, and also Bristol's small business grants. And there was one result, just one result, which came back on that was a potential overpayment of 2,500 to one market trader. And we're looking to actually recover that money. So the next stage is really looking at the bigger tranche of expenditure and carrying out all the post-payment review that we can carry out.
Thank you for that. If I may, Chair, thank you ever so much for that. I feel reassured that you know, public money is not being just whizzed out the door to any applicant. So I appreciate all your work on that. Thank you. And there's that second question as well, I guess.
Yeah. So Sophie, have you got a view? I think it was based on the cost reductions and the reserves position.
Thank you, Chair. So, yeah, I mean, absolutely, this is something that we will look at as part of our value for money work. The question is, you know, here, are savings plans deliverable and reasonable? And as I'll come on to on our report, we do include within our value for money arrangements review of the council, a review of the medium-term financial plan. And our specific action here is we will review the actions taken to identify savings and how these have been challenged, and we'll consider the plans to identify further savings. So this does fall within the scope of our 1920 value for money work. It's worth noting, of course, the timing here. Which is the audit is historical. So in terms of the audit, that will be to the 31st of March 2020. And so a number of these grants may not have been paid out, may not fall within the scope of the audit at that point. But the 2020-21 savings will definitely be considered as part of the value for money work. That is ongoing at the moment. As you know, the audit deadline has been extended this year. It was previously the end of July, and it's now the end of November. So that work is ongoing at the moment. I will talk through the COVID-19 significant risk that we have introduced as a response to the pandemic and how it impacts on the audit of the council. So I suspect this will come up quite a bit more during my presentation. But I hope that answers the question of whether or not those savings plans and recovery plans will be considered.
Thank you, Chair.
Okay, thank you. Has anybody else got any questions they want to raise? I've got nothing in the chat. I've got a couple of things that I was going to raise myself. If nobody else is coming up, no. Okay. So the first thing, Andy Rothery, you mentioned briefly the difficulty with the leisure services. I wondered if you could expand slightly on where we are with that and the likely implications.
Yeah, of course, Chair. So because in Baines, and this is a similar position for a number of councils, our leisure service is a provider, it's a contracted service, and many leisure services are reliant on their income from memberships. So this is something that does fall into the category of supplier relief. In terms of how we're addressing that, it's something that it's an ongoing discussion with our leisure provider. It's something we're in full recognition of, and have made a supplier relief payment to enable the leisure provider to continue operating, because our absolute situation we don't want to happen is that our leisure provider gets to the point of financial difficulty where they're not able to provide our leisure services any longer for Baines. That's a situation we're trying to avoid. This is quite a wide situation with leisure providers and councils, because for a non-council operated leisure provider, the loss of income for that provider is excluded from the income reimbursement scheme. For council operated leisure centres, that income from membership and bookings is included. So this is an ongoing discussion that's happening at a MHCLG level, and whilst that conversation is happening, we're in a regular dialogue with our leisure provider to ensure that they can keep operating successfully.
Okay, thank you. I was also interested in the reserves strategy. There's obviously you've got a position at the moment where you're proposing to take 10 million from reserves. There will be more money coming from the government, although we don't know how much. I wondered if you had a view on what position. Obviously, we've agreed, and it's gone to cabinet, that 10 million is a reasonable amount to take from the reserves. What's your view on as more money comes in, how that should be used?
So, in terms of the use of reserves, it's something that I think as a Section 151 officer don't really want to go there in terms of using your earmarked reserve to mitigate a financial position. But given the magnitude of the COVID-19 impact, as we said, the cabinet has agreed use of unearmarked reserves to help mitigate the position. And that's something that's been done in a very balanced way to ensure that there is a level of unearmarked reserves retained that can recognise future years' financial impact. The challenge is some of the wider use, because some of the financial planning reserves have been earmarked to mitigate losses in year. And with any use of reserve in financial planning, you have to factor in repayment of that reserve.
Sure.
I think I think the first thing that we need to be mindful of is fully understanding the longer term impact on the council's finances and how that financial transition and change is managed, because that's where in financial planning terms reserves can be very useful for helping transition annual budgets and funding change to enable us to become more resilient on the base budget footing in the future. So the announcement from government about the income scheme will allow us that flexibility to revisit some of those plans and reconsider alongside the financial mitigations that have been put forward in year around how that income is used to offset things. So it is a positive position to be in from the report that went to Cabinet on the 2nd of July.
Lovely, thank you. And Sophie, can I check with, is that something that the external auditors will be looking at as well, the reserves the use of reserves and the allocation of reserves to mitigation?
That is correct, Chair. To some extent, this comes within the medium-term financial plan significant risk, which we've identified for value for money. Again, it is ultimately the council's decision, and what we would do is look at the council's arrangements in place around this.
Sure. And so I realise obviously it has an impact on the medium-term financial plan, but will you be looking at the in-year changes will you be taking a view on the in-year changes after they've happened? I realise that audit is historic, so.
Of course. So the impact of COVID-19 will be reflected in our value for money planning and the work that we undertake.
Okay. Thank you very much. Has anybody else got questions on this item on the COVID-19 financial recovery?
Chair, I've been trying to get on. Sorry, it's John Barker.
Yeah, hi.
Yeah, I was trying to use the email function to put the MIS in, but it doesn't appear to work.
Not working. Okay,
I'm not very familiar with Zoom. I've usually
feel free to carry on, John.
Okay, thank you, Chair. It's a question to, I suppose, principally to Andy Rothery, and that's about the potential implication in the recovery assumptions, the risk assumptions, particularly if there's a second wave of COVID as a result of social care delivery. If, for example, there were large-scale closures or company bankruptcies for those elements of provision of social care, where the council has to step in almost as a lender of last resort, as it were. Is there any active consideration in financial values being placed to that scenario?
So yes, it's a very good question, John. So in the 42 million projected deficit, we have factored in pressures on the social care market, including, so there's the supplier relief and pressures on the market. We have factored in a number against that because of that very incidence of having to continue fund care providers to ensure they can stay operational, especially where there's council service users in those care homes. So in terms of the risk has been assessed, and it is factored in terms of our cost projections within our recovery plan.
Right. Okay. Could I just ask a supplementary about the cash flow implications of the numbers that you've described, the impact on the council's day-to-day spend? What sort of dialogue with the council's bankers was taking place? I realise this is a public meeting, so if there's any commercial sensitivity, please use your discretion. But I imagine there would have been some sort of dialogue about the continuing financial position and the projections of the council's budget, and also the implications around the pension fund cash flow as well.
Yeah, we are very conscious of the cash flow impact with the reduction in income, and through our treasury management activities, we are doing regular cash flow forecasting. I might, in terms of the conversations with the bank, I'm going to defer this question to Gary, who might be able to help in terms of the sort of the day-to-day management of our treasury activities.
Yeah. Okay, that's happy with that.
Yeah. Hi. So in terms of conversations with our direct bank, we haven't needed to kind of have those conversations kind of through our active treasury management processes. We've kind of ensured that we've had enough liquid investments available on call, and we took a number of actions late in March. I was going to cover these on the treasury report, but I can mention them now. So kind of late in March, we did undertake some short-term borrowing just to make sure our liquidity was sufficient to cover any impacts on our key income streams. So we were proactive there, and we also called back some of our notice accounts as well to make sure our liquid cash was maximised. So we kind of dealt with those potential impacts on cash flow that way. If that answers your question, John.
Yeah, I'm happy. I'm happy if you want to refer to it again in the Treasury management issue. If there's anything else that springs to mind before we get to that agenda. Actually, could I just ask one brief supplementary? That's around the reserves position. That's the restocking of reserves. Clearly, the current reserves have been built up over a number of years. Is there any finite term that you're currently putting on any action to restock reserves to what you would regard as a future prudent level, or is that something which will come out as a result of the final settlements from central government?
Yeah, that will be reassessed when we develop the medium-term financial strategy that turns into the budget proposal. So we'll be relooking at all of our reserve levels and factoring in reserve utilisation over basically the coming years, so the 3+ year period.
Yeah, so we could return to that sometime later on in the year. Yeah. Okay. Thank you, Andy and Gary. Thank you.
Thanks, John. Has anybody else got any questions? I'm not seeing anything in the chat, but wave at me if you're struggling to use the chat function. No, it looks like we're all right. So I'll close off that item then. Thank you very much, the officers, for their presentations. We'll move on to the Treasury Management Outturn report. So that's, I think it's Gary Adams leading on that.
Yeah, thank you, Chair. I was just going to give a kind of verbal update over the report, just kind of focusing in on the key kind of highlights and then kind of open up for questions afterwards.
Sure.
So the Treasury Management Outturn report kind of provides a review of our performance and activities over the past financial year. It includes performance against the Treasury Management indicators that were approved as part of our annual Treasury Management strategy. And these regular reports are required as part of the CIPFA Treasury Management Code of Practice. I'm pleased to report that all indicators are within target levels that were set in the annual strategy. And I'll also mention that the report, due to kind of meeting timetable, it's already gone to both Cabinet and Council this month. So members may have already seen this report at those meetings. Just to run through, I'll just take you through the key headlines on investments, borrowing, and then economic update. So on investments, the average investment return was 1.02%, and that kind of measured favourably against the benchmark rate, which was 0.53%. The main reason for kind of overachieving the benchmark was our long-term strategic investment we took out in the Ccla Local Authority Property Fund, and that generated a return over the year of 4%. We had £5 million invested in that by the end of the year. The majority of other investments were shorter term in nature and diversified across money market funds, other local authorities and highly rated banks. That's in line with a policy that we've had for a number of years now. So that's investments. In terms of borrowing, no further borrowing was undertaken in the second half of the year. So the total borrowing taken during the year was £10 million, and that took our overall total borrowing up to 232 million. The other thing to point out on borrowing was that in October, the government overnight increased the PWRB rates by 1%, and this was Treasury acting to try and reduce the amount of borrowing that local authorities were taking. The main reason they were citing was that local authorities were borrowing a lot to do property acquisitions, so they implemented this measure to kind of quell that borrowing, and then they've launched a consultation which closes tomorrow on further changes they may implement to try and prevent access to PWRB borrowing purely for these debt for yield activities. So that's on borrowing. And quickly on the economic update. So towards the end of the year and in light of the COVID impacts on the kind of economic outlook, the Bank of England made 2 reductions to the base rate. So the first one took it down from 0.75% to 0.5%. And then that was shortly followed by a further 0.4%. So current base rate is an all-time low, 0.1%. And it's envisaged that that will kind of stay at that low level for quite a while until the economy starts to pick up. And in relation to John's point, I'll just go over again the actions we kind of took from Treasury management in light of the potential cash flow and market liquidity pressures that were present around them was to kind of reduce our counterparty risk by calling back some of our fixed term notice deposits. And we undertook some short-term borrowing on the 1st of April. So that was kind of to make sure we did have the liquidity to address any issues with reduced income, to make sure, suddenly we weren't able to access that funding. So they were the main points I kind of wanted to raise in introduction. So I'll pass that back to the chair for questions.
Thanks. So if people would like to indicate in the chat if they've got any questions. Councillor Furze, you're up again.
Thank you, Chair. I've probably asked this one before, Gary, so apologies if I sound like a broken record. But we've got there's a £2.4 million underspend in Appendix 6, yeah, and how we arrive at that, and correct me if I'm wrong, or please expand if I'm right, is that we have a borrowing. An overall capital borrowing of something like 400 million, yeah, but we've actually only borrowed 200 and something million, yeah, and therefore to service that debt we are saving something like 2.4 million pounds, yeah, and if that is true, if my understanding is true, then where does the 323 million come from that you mentioned earlier?
So,
or am I completely off piste here?
No, you're close. I mentioned 232 million, which is our total borrowing. The 323 is what we term our capital financing requirement. So that is the official kind of balance sheet review figure saying how much is our borrowing need at the end of the year based on the historical capital spend. So there is a gap between what we've actually borrowed and what the implied borrowing need is. And the main reason for that is we use our internal cash to delay the borrowing. So it's things like you're holding reserves, you've got provisions on the balance sheet. And so we're using that positive cash flow balance to reduce the need to borrow. And that's creating the underspend by kind of taking that course of action and delaying borrowing.
So using the cash today against the capital borrowing requirement, because of the climate we're in, would it be, well, I don't, this is where I get lost with all this, but would it be more sensible now to put that cash against all of these other problems that COVID has thrown up, rather than against the capital? Does that make any sense?
Yeah, well, we do have to fund those pressures, and as they come through, we will fund them. So the financial recovery plan is trying to offset those costs anyway, so we're mitigating them. I guess the issue would be if we do start to use reserves to fund those pressures, then we would have to unwind some of that internal borrowing position. So at the moment, that's why it's really important to have a financial recovery plan in place to actually mitigate those costs hitting our reserves and kind of having to unwind that position.
Yeah, because we're using cash in this year's financial period to service the capital, where we could go and borrow against our capital programme and use that cash for the immediacy of what Andy Rothery's saying about the, that we need just to keep the business flowing, I guess.
Yeah, and that's active treasury management at the moment. We did do some borrowing at the start of the year just in case, but through the government has been providing grants, to us to help support as well. So that has helped our cash flow as well.
Right, okay, yeah.
So we're balancing both sides of the coin there. And at the moment, there hasn't been any need to take out borrowing because we'd be borrowing at higher rates and then having to invest it somewhere, which increases your kind of counterparty risk, and you're investing that in much lower rates. The current kind of short-term rates we can get on investments are kind of down at 0.1, 0.2%. So we're kind of actively managing that to make the best value out of our kind of cash balances and borrowing position.
Thank you. Thanks, Gary. Thank you, Chair. I think that's answered. Well, that's given me the clarity that I was after. Thank you.
Okay, thank you. I've got Councillor Blackburn up next.
Thank you, Chair. Just going back on the summary of returns, Gary, if I can, just your sense of what will be coming. You touched on the local authority property fund and that great 3.9% return. Our authority property at the moment is not looking like it's going to give us our returns. What is your thoughts as to how that will affect the 670 we enjoyed in the last 12 months? Where do you see that being?
There'll obviously be a reduction on our short-term cash due to the kind of Bank of England base rate. So I think that will be the main kind of impact there, which some of that in the first quarter has been mitigated by our higher cash balances, because the government, as I said before, with the grants to businesses, they did kind of give us that grant money up front, and it took us a while to actually implement that. So that will mitigate it a bit. On the property fund, I think the good thing about the Ccla property fund is, in terms of their exposure across the market, they aren't that heavily invested in retail. So they're mainly kind of invested in industrial, commercial, and kind of a lot of delivery warehouses for big people like kind of Amazon and that, where they're seeing kind of strong rental income in those sectors. So although I think the interest earned on that fund will reduce slightly, is inevitable with kind of property related, I don't think it'll be significant. I think in the first quarter, it's dropped from about 4% return to 3.5%. So there has been a slight reduction there, but even with our outlook, they are kind of getting increased returns on rent renewals in their sector. So I think it may be a bit subdued there, but I don't see it kind of as bad as our retail estate.
Right. Thanks, Gary. Obviously, with 670k coming in from that area, we don't want that part to fall apart as well. So.
Okay.
Thank you, Councillor Blackburn. Have we got anybody else who'd like to ask any questions? No, there's nothing coming up. I guess I'd just like to pass on my thanks for the efforts of the council officers, and I think that the Appendix 3 average return against the benchmark being significantly higher every month is a pretty good achievement. So thank you for that.
Okay.
Good. So we'll move on to the next item, which is the external audit update. So Peter, who's joined the meeting now, I think is leading on presenting the external audit.
Thank you, Chair. Yes, apologies for my late arrival. So conscious that item 11, there's a number of appendices, 5 appendices in all, and I'll take you through those, and then I will hand over to Sophie, who will just give you a brief update on current progress with our post-statements audit visits. So I'm conscious for those members that were at the committee back in February, seems like a long time ago, I shared with the committee our fees letters for both the council and the pension fund, and that trailed some of the areas of additional focus this year and the impact on fees. Following that meeting in February, towards the end of February, we issued our external audit plan for both the council, which is Appendix 1, and for the pension fund, which is Appendix 2, with the intention of obviously taking those to the April meeting of this committee, and then having considered, as you do, recognising that plan was at a point in time, end of February, then having considered the impact of COVID-19 on our responsibilities, we then, as we did with all our local government audits, issue an addendum to those plans, setting out a new additional risk in relation to COVID-19. So we've issued at Appendix 3 an addendum for the council, and at Appendix 4 a addendum for the pension fund. With your permission, Chair, I'm conscious there's a lot of papers here. I was just going to just run through those in a little bit of detail.
Yep, that's fine.
So Appendix 1, which starts on page 31 of your papers, this is the external audit plan for the council. The summary position is set out on page 34 of your papers, and is very similar to previous years for the council. You know, our responsibility is twofold for the council. It's an opinion and a VFM conclusion. And on page 34 of your papers, you'll see that we've set out the significant risks that we'll be focusing on. And the top two, revenue recognition and management override, are two default risks that apply to every audit. Revenue recognition, in most cases, is rebutted at most councils because the revenue is well defined and it's normally council tax and business rates. But we are conscious here that you have a very large investment property portfolio, and therefore we have decided to do, as we have in previous years, some additional work on the income arising from that portfolio. Management override controls are those areas of the accounts that are subject to a greater degree of estimation and judgment, but also things like journals, which is obviously a very easy way to move money between accounts or we use should you wish to do so. So there's a whole raft of procedures we'll undertake on journals. And then we go on to the primary statements, and the next two, investment property and land and buildings. Clearly, we've recently received the accounts off yourself, the draft accounts, and every year there is some pretty sizable figures at the top of your balance sheet. Your land and buildings, your property, plants and equipment, and your investment properties. Inherently, these are very difficult to value. You use an external valuer to value these assets. And obviously the added dimension this year is the complications that COVID-19 presents in terms of the added degree of uncertainty over what is an appropriate carrying value for all those assets. So there is a whole raft of procedures we will be doing in both of these areas. I think it's fair to say that the work in this area has increased significantly over the last 3 or 4 years. We've been encouraged to be more challenging by our regulator, and that's what we're doing. And this year in particular, we will be bringing in, as I mentioned back in February, an auditor's expert to advise us on some of your disclosures in relation to investment property. The penultimate bullet point on significant risks is the pension fund liability. So just as you have those two big assets at the top of your balance sheet, you have a big liability at the bottom of your balance sheet. Once again, large element of judgment and estimation by the actuary, and another area that we are having an increasing focus on, and lots of work that we'll be doing on that one. The final one is the accounting for the creation of the subsidiary Aqueous. So you've obviously had this wholly owned subsidiary for a number of years, but given its increase in size, for the first time this year, you've concluded that it's significant enough to consolidate. So that's why you have group accounts in your accounts, draft accounts for the first time. And there will be some specific audit procedures that we undertake in that area as well. Underneath, we talk about materiality. And the figure this year is 7 million. What we will be doing is, as required under auditing standards, we will be undertaking audit procedures on any balance within your primary statements that's in excess of that figure, but clearly focusing on the significant risks. That's the opinion, and that's our approach. The other area of responsibility is the value for money conclusion, and we will be looking at two areas this year, as we have done in previous years. The first one is the council's medium-term financial plan. This takes on a whole new meaning given the outbreak of COVID. I'd be surprised if there's any council out there that doesn't have medium-term financial planning as a significant risk in this area. What we will do is look at how you delivered 1920 budget setting back in February last year, how you monitored it all the way through to delivering the outturn. But probably more importantly this year, we'll be looking at your 2021 budget and the medium-term financial plan. We will look to see how the budget was set initially back at February full council, but importantly, we'll then look to see what you've done following the COVID outbreak to respond to the additional costs that you've incurred, but to a greater extent, the significant loss in income that is likely to continue for a significant period. We recognise that there's been funding, but we recognise that funding, although welcome, does not cover the gap, and therefore we will be commenting on how you've responded to that as part of our value for money work. Chair, that was all I was going to say on the council, apart from just bringing to members' attention for completeness the fees, which is set out on page 47, I think it is, of your papers. These are the same fees that we proposed when we presented this in the fees letter back in February, where we went through each of those in a bit of detail. I could go through the other appendices, but I'll probably stop there, Chair, to see if there's any questions on the plan for the council first before I move on.
All right, thank you very much. If people would like to indicate, and again, Councillor Furs.
So, sorry to keep going on, Chair.
No, quite all right. You just click up the button.
Peter, medium-term financial plan, you just touched on it. So it says in there, over the past 2 years of 2021-22, the budget gap was 13.63 million before savings proposals. So far, 6.9 of savings has been identified. A further 6.73 million savings need to be found. Now, is that subsumed, that 6.73 subsumed into the 20.7 that Andy Rothery talked about, or is this a different 6.73? Am I making sense again? Sorry, there's a lot of blank looks at me.
So if I may, Chair, I'm conscious that I joined this meeting partway through. This is at February, so this was pre-COVID. But Sophie, are you?
Yeah, sorry. Yeah. So Peter,
I'm happy to take this. So this was as at the February budget setting position. So these were the savings proposals for 2021 and 2020-21. So the next 2 years. So this position will have moved on significantly as a result of the COVID pandemic. Yes, that is correct.
Yeah. Okay. So thank you for that. So these figures really have been rewritten. They've been rewritten. They're not additional to. That was the point I was making. Yeah. Okay. Yeah. Thank you. Yeah. But no, I fully understand that things have moved on, but I just wanted to make sure they weren't extra.
Of course.
Okay. Anybody else got any questions? I was just going to check. Actually, Peter, I guess. Without meaning to sound impertinent, I mean, can I check on your own financial resilience and ability and staffing issues around COVID and your own ability to meet the deadlines? I mean, I know we've now got until the end of November, but you're comfortable with your own position about managing the COVID crisis for carrying out the audit process?
Very interesting question. I mean, we have a large NHS portfolio of audits as well. So the NHS accounts are more simplified than local government accounts. So we've just completed those. And they took a month longer than previous years. So historically, NHS bodies have until the end of April to produce their accounts, and we had to the end of May. As with local government, the government extended the deadline by a month in the case of NHS, and we needed that time, as did the NHS bodies. As a firm, we've been very clear, and we've articulated this to previous meetings of this committee, that we expect our people to work from home because we think it's the safest thing to do. On that basis, we have been working with Andy and the team to discuss the most effective way of discharging our responsibilities remotely. You know, and I think it's fair to say that our skill set in terms of IT and sharing screens, etc., has increased significantly. But the fact is that it is less efficient. You know, there's lots of things we can do remotely, equally efficiently, but particularly at the post-statement stage, there's nothing that beats being on site and, you know, one of the team popping around their head around the corner to the finance team and asking them to show something on screen or asking a question. So it will take longer. We are grateful for the extension, which is a significant one, because the deadline has been brought forward over a number of years, and the deadline in any normal year would have been tomorrow, the 31st of July. So, you know, we have to be aware of our people and, you know, the risk of them not being well and not being available. Touch wood, at the moment, we've been okay, but we want to make sure that we are not putting any more undue pressure on you and your finance people, but also not putting any pressure or any undue pressure on our own teams. And we continue to respond accordingly. We've got the accounts. We have a timetable agreed with finance colleagues, and we are confident, subject to any unforeseen issues arising, that we can deliver to the revised deadline.
Thank you. Anybody else got any questions? John, I ought to check with you, given that you were struggling with the chat. No, you're fine. Shaking your head. Good. Thank you.
No questions, Chair.
Good. So, Peter, were you going to move on to the next section?
Yeah, thank you, Chair. So I'll now move on to Appendix 2, which is the plan for the pension fund that was issued back in mid-February, pre-COVID. It follows a similar format. The difference with the pension fund is we don't do the value for money conclusion. There isn't one. It's only the opinion on the accounts. The risks are set out on page 55 of your papers. Unsurprisingly, the same two that we referred to on the council, management override and revenue recognition, very similar. But the other third risk is the value of your level 3 investments. So the Avon pension fund will have, you know, it's got £4.5 billion worth of assets, reduction of about 300 million since last year due to the financial challenges. Those assets are one of 3 categories: level 1, 2, and 3 investments. Level 1 being, you know, easy to value, you know, readily held shares and stocks that can be valued at any point in time. Level 3 a bit more, level 2 a bit more complex, and level 3 hard to value. We focus on level 3 because the inherent risk of level 3 is there, and that arguably is increased this year because for a number of investments at that level, often pension funds will look at the December position and then look at movements in the intervening period before year end. Clearly, lots of things happened towards the back end of last year, and therefore we are being more inquisitive and more challenging of the basis of those level 3 investments in particular this year. Suffice to say that we look at all the investments you hold and make up that £4.5 billion of assets, and we work to a materiality figure again. This is 1% of the assets. So when we did this plan, it was based on last year, which was 48 million. We've now revisited that, and it will be coming down to 45 million to reflect the lower figures. And that is how we're proceeding. And once again, there is a small increase, a smaller one, as you would expect, for the pension fund in the proposed fee that is set out on page 63. And I'll stop there again, Chair, and take any questions on the February audit plan for Avon Pension Fund.
Thank you. Anybody got any questions on the pension fund audit report? I am not seeing any.
In which case, Chair, I'll move on to, and if I can, I'll take Appendix 3 and 4 together.
That sounds like a good idea.
So these were issued in May, and these appendices, these addendums have been issued across all our local government bodies, and it really just sets out what we think the COVID-19 outbreak means for us in terms of our responsibilities. So if I take the council one, and I refer to page 71, you'll see on page 71 that we talk about some of the risks. And interestingly, Chair, in response to your question earlier, we reference the remote working. And obviously one of the things we will be doing is, when we do this, is introducing some additional audit procedures to get assurance over the authenticity of some of those documents, recognising we can't physically hold them. So that brings an extra challenge, both for us and you. The second bullet point around property markets I've touched on already, and the value of particularly your investment portfolio, your property investment portfolio. The financial forecast and the going concern, bullet point 3. This is an interesting one, in that the assumption is that local government bodies are going concerns, and we don't disagree with that. But it's all about your ability to meet your responsibilities for the 12-month period following signing of the accounts. So we're now looking forward or projecting to November 21, and we will be asking Andy and the team for probably a bit more this year to support the appropriateness of the going concern, adoption of the going concern assumption, given the significant financial pressures you are under, particularly at Baines, given you're relying on investment income. And then the final bullet point is all around additional disclosures required under IS1 in relation to COVID-19. And those are all the areas that we will be focusing on, both at the council, and in the case of the first bullet point and the fourth bullet point, the pension fund. And clearly on the pension fund, the other challenges, as I've alluded to previously, around the level 3 investments. So I'm hoping that those appendices 3 and 4 are self-explanatory, but once again, happy to take any questions.
Okay, I've got a question from Councillor Simmons.
What have you taken into account the change in the base of the pension fund, where we're going for green and non-hydrocarbon industry investments? How will that affect the balance sheet at the end of the year, where we've swapped out good investments into green investments?
So if I take it for the pension fund first, Avon Pension Fund, clearly that is a decision for the pension fund. We as auditors are interested in that the amount that's recorded at year end is correct. It's not for me to comment on what the pension fund invests in. That's for the pension fund to decide. What I will be looking at is the figure at year end, and that it's an accurate figure. In terms of the council, clearly the council has a share of the assets held by the pension fund, but it also has liabilities. The liabilities outweigh the assets. Interestingly, this year for both the pension fund and the council, there's been a triennial review that's done by the actuary once every 3 years, dated the 31st of March 19, that took place in 1920. And that has helped the net position. So I referenced the fact that the net assets have gone down for the pension fund. They would have gone down due to the market forces for the council as well. But interestingly, the liabilities have been reduced based on the discount rate changes and changes in longevity assumptions by the actuary. And therefore, that has closed the gap slightly, but nonetheless, the council and the pension fund have significant net liabilities.
Thank you.
Okay, anybody else got any questions? No, I'm seeing shakes of head. So I think we're done there for Peter, are we? Have you got any?
We've just got one more apologies, Chair, one more appendix to do, I'm afraid.
I do apologise.
Appendix 5, which is just for completeness, a grant funds and report. So this starts on page 77 of your papers. An in-depth insight into the impact of COVID-19 on financial reporting. So this was really just a report that we've done just to inform the production of your financial statements. So it's predominantly about disclosures in the accounts, but interestingly, it does contain some observations about how different councils are responding to the outbreak and what they're doing in terms of responding to it. You'll be pleased to know I'm not going to go through any of the detail, but it's just an additional bit of helpful information that we think, you know, is supporting the wider sector. The only other thing I was going to do, Chair, is just hand over to Sophie very briefly, just to give you, because I'm conscious that we've now had the draft accounts for both the pension fund and the council. So I was just going to get Sophie to give you a brief update on where we're up to on the post-statements audits.
Lovely, thank you.
Thank you, Chair. Thank you, Pete. So I thought it would be helpful to provide sort of more of a logistical progress update in terms of where the two audits currently are at the moment. As the committee will be aware, Michelle Burge has left Grant Thornton, so I am actually now the manager for both the pension fund and the main Baines audit as well. So I think it's fair to say that the audits are both progressing well at this point in time. So we've had good responses from both sets of the finance team. So thank you to Gary, Giles, Jamie, and also to the pension fund finance team as well. We've received the accounts on a timely basis. So again, before the revised deadline. As you know, we're now working to the end of November as a deadline, and the audit committee, I believe, has been set for the 26th of November. So that will be the deadline that we're working to for the main council audit. The main council audit has started. We'll be continuing that through August to November. So it is a longer time scale this year. That is partly due to the impacts of COVID, some of the challenges of remote working, and also noting that this is the first year of group accounts. There'll be a significant amount of additional work for us to undertake in that area. So that audit is still very much in the early stages. I think it's fair to say there's nothing that I need to report to you today. The Avon Pension Fund audit is significantly more advanced, so the fieldwork for that should be complete within the next 4 weeks. Again, we have had some challenges in terms of COVID-19 and working remotely. So, for example, the triennial valuation testing, that would normally be a few hours sitting with finance officers looking at a computer screen. That's now a number of several hundred screenshots that we need to work through. So there are some significant challenges there. However, the finance team have been very supportive in enabling us to meet those challenges. So as I said, we are hoping for the fieldwork to be complete by the end of August and for the main audit to be complete within a month following that. Again, there are a number of unknowns here due to COVID-19, but hopefully that should give the committee an idea of progress at this point in time.
Thank you. And the Councillor Furze, you got a question?
Thank you. Just so the big question then, Sophie, really is the council still a going concern with all these pressures on it?
Thank you, Councillor. Well, ultimately, that is the council's assessment to make. So we will be asking Andy Rothery, the Section 151 officer, to provide us with a formal assessment updated as a result of COVID-19 in terms of whether or not the council is or is not a going concern. My understanding is that the accounts have been prepared on a going concern basis, so the assessment in effect should reflect that. We'll then assess the Section 151's assessment of that. Pete, if you'd like to comment as well.
Thank you. That's almost a lawyer's answer to my question.
I mean, what I would say, Councillor, is that I've never come across a council that isn't a going concern. I don't even think Northamptonshire has been deemed not to be a going concern. There has been a change in the assessment over recent years, and the auditing standard, the accounting standard, in that. Historically, councils have been a going concern, but now there is a middle category, which is, yes, we are a going concern, but there is material uncertainty. So you still produce your accounts on a going concern basis, you still are a going concern, but if you have particularly challenging financial position, it may well be decided that, yes, you are, but there are material uncertainties to that assumption. And if you were to conclude that, you would have to disclose why you thought there were material uncertainties in your accounts. And if we concurred with that, then we would reference that in our opinion. And I think it's fair to say that that is an increased risk across a number of councils this year.
Thank you. Thank you, Chair. I wonder whether we want to ask Andy Rothery to comment on those.
I think we probably know what his answer will be, but go on. Let's get it on record.
Well, I think you know, so if you said our accounts will be prepared on a going concern basis, and you know, in light of the current situation, we're making a full assessment of our financial resilience. But I think the additional thing I'll say, you know, Bath as a council is a financially very well performing council, and we aim to continue to be that, you know, well performing financially.
Yeah, thank you, Andy. Thank you, Chair.
Thanks. Anybody else got any questions?
Yes,
John,
Chair,
you're unmuting, which means you probably want to ask a question.
Yes, I do. Thank you. I'm having technical difficulties with trying to get onto the MIS.
That's right. No problem.
Yeah, addressed to I think to Peter, and that's about if there were any objections now that the accounts have been. I believe the accounts are now available for public inspection. Are they? Deposited? Yeah. If there were any objections in a normal year, I think you would be able to have a face-to-face discussion with a potential or an actual objector. Are there any contingency plans should any objections to the accounts arise this year? I'm just anticipating that there may be more than usual interest on perhaps specific elements of the council's finances as a result of the COVID epidemic.
Interesting question. So clearly the accounts are available for public inspection, and you know that they are entitled to, I was going to say come in and check them, but obviously ask for information contained within the accounts. And are able to ask questions of the entries, you know, and that is for you to provide them with the information they request, you know, and only if they continue to be dissatisfied or concerned about any item of account in those draft accounts, would they then need to come and speak to me. In the old days, you're absolutely right, there was a date, and I used to sit in reception or up in the audit office and wait for them to come in and ask questions. It doesn't work like that anymore. We ask them to contact us and discuss it, and if we think there is a valid objection, we will ask them to put it into writing and send it to us, and then we will formally consider it and decide whether we consider it to be an objection, and when we do, we will undertake our work to satisfy ourselves that there's nothing that impacts on our responsibilities.
Okay. Am I back on?
You are.
Yeah. I don't know whether to address this to Peter or if Andy Rothery would comment. Are there any, or has there been any thought given to the practical implications of anybody who might want to raise an objection? Because clearly the facility for physical inspection of actual records, I would have thought, would be significantly limited. Whether it's more a public relations issue, I guess, rather than a logistic or a legal right to inspect original documents. Presumably screen copies or some other form of electronic transmission can be substituted for inspection purposes should that eventuality arise.
Andy, have you got a...
Yeah, I'd say, you know, in terms of the inspection period and us managing that electronically, it's something that we're well equipped to do, because the majority of our records, and also prime records, can be accessed through scans and other means. So we are very capable of, you know, providing information as required. In terms of the needing to actually follow up any sort of issues, that's something that we will have to accommodate and comply with within the social distancing requirements.
Yeah, I realise from, you know, my past experience in my Oxfordshire days that objections can be significantly disruptive if they're a persistent or a malicious objector. So I'm surprised, frankly, there hasn't been any national guidance offered. But there we are. Okay, so thank you anyway for your responses.
Okay. Has anybody got anything else on this item, on the external audit update? I'm not seeing anything. Jack has kindly reminded me that good practice has been to offer a 5-minute break every hour, and we've been going an hour and 20 minutes. So how do people feel? Do you want to plough on, or do you want to take a 5-minute break? I see that Councillor Simmons possibly has taken a 5-minute break.
My picture's just disappeared. It's one
Oh,
of
I see. I do apologise, Brian. It looked like you'd gone.
there's something wrong with the winter here, and I'll cut off.
He's in the mist. He's in the mist,
yeah.
Mark. He's gone back into the
fog of
mist.
the fridge. Yeah, well, that's good.
I just get cut off, and when it comes back on, it's a different ID. So I've got to boot and come on again.
Okay.
So
Okay. I didn't hear anybody shouting for a break, so I mean, I suggest we carry on if that's okay. Yeah, that seems to be general agreement. Good, thank you. So we'll move on to item 12, which is the internal audit annual report. So I think it's Andy Cox, CD on that, or is it Jeff?
It's myself, Mark. Thank you.
Lovely.
Thank you, Chair. Just a quick introduction to the two internal audit papers. The two reports today were originally tabled for the meeting on the 28th of April, which is obviously cancelled. And based on that, what I did was to contact Councillor Firth, who was the then chairman of the committee. I contacted Andy on the Tuesday the 21st to discuss the papers and also the position we were in terms of providing internal audit service. And then subsequent to that conversation, I sent the two reports to all members of the committee on the 24th of April. I just wanted to clarify what the position was back in April. And we're now the first meeting into the Corporate Audit Committee and re-presenting these two reports, really. So if I could go straight to the first report, the Audit and Assurance Annual Report 2019-20. This basically provides a position statement as at the 31st of March 2020 against the 2019-20 audit plan. There is a performance dashboard within the document, and that records the key performance indicators. And there's also an Appendix 1, which records all the audits which were in the audit plan and the status and the outcome for each of those 36 planned audits. Just want to provide a quick update to committee of where we are now on that. And I'm pleased to say that today, all the audits that we intended to complete have now actually been finalised or just awaiting management comments to enable the reports to be turned from draft to final versions. So I'm very pleased with that based on the impacts of COVID and how well the team have actually responded to that. So if I could just bring your attention to the dashboard, and I won't go through the whole dashboard. I'm just going to focus on two speed dials, which are the ones recorded where the speed dial is pointed into the red, which I thought as members of the committee are going to be most interested in. And that's audits completed within planned time, which is dial 2, and also dial 4, which is the implementation of high risk rated recommendations. So as stated in the report, the performance indicator for the audits completed in allocated time was based on just the 11 finalised audits. And of those 11, 2 had actually overrun by a small number of days, which I was completely happy with. The only significant overrun was related to an investigation that we were carrying out at Parade Gardens, for which I'm satisfied that the additional resources were required for that. And I think we covered that off in our February meeting, where I did a briefing to the committee on that particular investigation. So for the second dial, which recorded only 60% of high risk rated recommendations being implemented by the time scale that the management agreed to, it's very important to be aware that the number of audits, the number of recommendations not implemented were just 4, and that was at the time of the follow-up, at the time the audit team carried out the follow-up. One of these recommendations was related to the bereavement service, and that was basically handed on to the Director of Environment Services to monitor. The three others were related to child direct payments and child referrals. Both of those areas were managed by the Director of Children and Young People. In terms of that, I've maintained an ongoing conversation with Mary Kearney-Knowles, the Director, and I was provided the latest update on the 20th of July. And it was good news in terms of that. The child referral recommendation, which was specifically related to monitoring performance, has basically been achieved now, and that has had input from the corporate performance team there, and I'm satisfied basically the action required has and they will continue to be implemented. I'm also satisfied that appropriate action has been taken relating to the 2 child direct payment weaknesses which were identified and reported. So through my conversations with Mary, I'm happy now that the recommendations have been implemented. It's probably taken more time than management thought it was going to take them, but that's often the case in terms of internal audits, and managed responses are sometimes a bit more positive than they are. And when you actually go back to do the follow-up, they actually haven't implemented them. But it's good news now that those recommendations have been fully implemented. So in addition to reporting on performance of the internal audit team, this report also refers to the public internal audit standards and the internal charter, and the need to provide a formal opinion on the council's internal control environment. And the statement of the Chief Audit Executive is recorded in section 4.11.2 of this report for you to have a read, and to really, if you have any questions in relation to the report, and also the opinion given by the Chief Audit Executive. Over to you, Chair.
Thank you very much. That's great. Have we got any questions? And Councillor Furze.
All right, yeah, thank you, Chair. Just to follow on from what Andy Cox said about the exchange we had, I was just checking my emails, and we had an exchange of, just for the committee's record, really, we had an exchange of emails on the 24th of April, and then then there was it was circulated to the whole committee for comment and input, just to make sure that was on the record, that we did everything what we could do at the time. We did suggest whether there was any appetite for a sort of a Skype meeting at the time, but it wasn't necessary. So we could have, but we didn't, because it wasn't necessary. And there were a couple of questions floating around which Andy dealt with by email. So thanks to Andy for that.
Thank you very much. Has anybody else got any questions? No, there's nothing coming up. Thanks for your feedback on the dashboard. Obviously, I mean, it sounds like you're comfortable with where we are now, Andy. But how does that obviously, I'm a relatively new councillor. How does that compare to previous years? I mean, where would you have been normally on that dashboard?
In terms of a specific speed dial, or just the two that I reported?
Just generally, I mean, would it be normal to have kind of 1 green, 2 red, 2 amber? You know, is that roughly where you expect?
Yeah, usually we would like to be at least into the amber for obvious reasons regarding the performance indicator, and that's why I commented specifically about those 2 within the red band. And it's important to do that. I think there's always, as I've mentioned during my summing up of the report, there's always that issue in terms of management response being very positive when you receive comments about the draft report.
Yeah.
When you turn up, say 3 or 6 months later to carry out the follow-up, that's when you're reminding managers about those actions, and they're suddenly, oh yes, we still need to do X, Y, and Z still, or they've partially implemented and we can't say it's fully implemented. And so that's a part of the reason why it would still be red on that speed dial.
Sure.
It's only when we're satisfied it's been fully implemented will it go green, and it would be recorded as implemented within the audit software.
Sure. And that, I know the current average assurance level is only just above red. It's just nudging the amber. I mean, are you feeling comfortable? I mean,
sorry, this is the, yes, in terms of the current
audit
average
opinion.
assurance level.
Yeah.
Yes, in terms of that, because this is an average. So you will get some good ones, you will get some poor ones, and I think that's in the pie diagram just to the left.
Yeah, sure.
There was 50%, but that was 50% of those finalised audits. It's probably better for you as a committee to be seeing those reds and some reds there, so we're providing you with the relevant level of assurance in terms of that, and
Absolutely.
also in terms of what I've just reported in terms of implementation recommendations.
Yeah, absolutely right. Yes, if the audit was all green, we'd be a bit worried.
Yeah. Yeah.
John, you've got a question?
Yeah. Yes, question to Andy Cox, and that's really following on from your last comment, and that's the in the pathway to the annual governance statement, which will, I guess, will be slightly more relaxed timetable this year to coincide with the deferral of the accounts. Will you use that as an opportunity to put a little bit more pressure where there are unresolved deliveries of agreed recommendations? Is that a realistic assumption to make?
Probably not through the annual governance process. It's more, as I said, with the liaison with the relevant director. Yeah. So, for example, dealing with Mandy Bishop on the Director of Environment, and also Mary Kearney-Knowles. If we have to go back to directors, we will go back to them, especially when we're finding through follow-up that the recommendations have only been partially or not at all implemented.
Yeah.
And that's where we try and twist arms to make sure things happen. At the end of the day, we've identified those as high-risk recommendations, and management have agreed to that, and have agreed to the actions. So it's very much with management to get those actions implemented.
Yeah. So that are you saying that sort of failure or inability to address and deliver agreed recommendations is not really material that you would be able to include in the annual governance statement?
No, I wouldn't thought it's significant enough, John, to be included in the annual governance statement.
Only if there was a string of material outstanding recommendations. I think.
And again, I will be looking at going back to Andy Rothery's section 151 anyway to highlight that to the statutory officers.
Yeah. If you like, the informal pressures as well as the relationship pressures. Okay. Yeah. All right. Thanks. That's a point of clarification.
Okay. Thank you very much. I'm not seeing any other questions coming up on the internal audit annual report. So should we move on to the internal audit annual plan, which I think is you again, Andy?
Certainly. Okay, Chair, thank you. It's a requirement of the public sector internal audit standards to prepare a risk-based plan, and the plan is Appendix 1 of the report. And this is the final product following consultation with senior management, and also using our adopted reasonable assurance model, which obviously takes into account our knowledge and experience of the organisation and what we consider as risk. The plan that you've got in front of you was compiled prior to COVID-19 lockdown, and the changes to council service provision and all necessary responsive work related to that. The plan work would therefore have to be replaced, and we are responding to requests for help and assistance and support. Plus, we are using our monitoring of the council's response to COVID-19 to consider activity which requires our independent review. Based on that, to date, we have carried out the following unplanned work, and I touched upon this earlier in answer to the question. So I'll just run through some areas that we've actually been working on now, which are unplanned but essential in terms of where the authority is now. So we've carried out an audit review of the community hub and the stock management related to PPE. And that was one of our first actual remote audits that we've carried out. So obviously lots of lessons learned in terms of how to carry out remote audit, how to liaise with staff, and especially liaising with staff who are very busy and very much focused on delivering the objective of, why the community hub's there. Second thing, we've assisted to verify the accuracy of supplier relief payments to passenger services suppliers. We've also assisted to accurately record support provided to adult care providers, which was mentioned earlier. So that is what support we're actually providing to them, and also identifying where support isn't being provided. And that could be an indicator of some business continuity issues in terms of that provider, which could land the authority in a difficult situation. So we've been involved with that. I mentioned earlier as well that we've provided guidance support on the internal control framework related to the grants to small businesses. That's small businesses, the retail, hospitality, leisure area, and also the more recent discretionary grants falling outside of those two main grant areas. I also mentioned earlier that we're commencing a review of those grants, specifically looking at process and records management. And I also added earlier about the focus of the work of post-payment review, and that's using those tools that I mentioned earlier, for example, the NFI tool linked to Experian and the UK banks. We've also had quite an involvement in fraud awareness, publicising fraud and scams, and that's internally in staff officer environment in terms of the fraud bulletin that we produce, and that was publicised through an electronic newsletter, a staff engagement. And we've also liaised with our colleagues in Trading Standards who produce the external guidance, and that goes out through the council's weekly newsletter. So I hope that just gives you a little bit of a feel of the amount of unplanned work we're doing. But in terms of the plan for 2021, I'm also pleased to say that we have started audits in the plan. We will continue to do that, all those audits, but we'll obviously balance that off against what responsive work we do, and that's where I will closely liaise with Andy Rotherham. Any questions?
Sure, thank you. Anybody got any questions? No, I'm seeing some shaking of heads. Just so when you have to, you're obviously going to have to drop some areas from the planned audit because of the unplanned work. Who prioritises that? How are those decisions made?
We tend to do that, Chair, when we're building up the plan itself. So we're considering the risk of those audit areas as and when. So basically what happens is I create a long list. I then have to balance that off against the resources of the audit team. I will draw a line. Anything above that line is audited, and obviously it's in risk score. So it's quite easy to see what I consider the higher risk ones and the lower risk ones. So over time, I will be replacing the lower risk ones.
Sure, thank you. And just to check,
sorry, it's John Barker. Yeah.
Yeah, go on, John.
Question to Andy. On part 3 of the audit plan, areas for review. Are there any areas where you're practically or positively able to conduct a sort of a partnership audit initiative with North Somerset and any other surrounding areas that may have a particular category of investigation arising from COVID or anything connected with COVID? Has that been discussed, for example, through the informal channels, through the local audit networks?
Yeah, not directly related to the plan work, John, but in terms of the responsive work. So, for example, on the grant work, we've worked with Bristol City Council, for example, and also obviously One West. We provide the services to Baines and North Somerset. So what we've done there is liaised with Bristol City Council and provided them data of our discretionary grants. And that resulted in that result I mentioned earlier about the one case being identified where a market trader had applied for both a small business grant and also a discretionary grant in Bath. So in effect, they weren't entitled to that discretionary grant. So we are continuing to work with our colleagues within the WECA area. But obviously part of our team is based in North Somerset anyway, so we liaise very closely, which is really useful, especially when you're talking about the grants, supplier relief, and understanding how North Somerset are applying things compared to how Baines are operating.
Okay, thank you. So it could be an opportunity for closer cooperation in the future, I think, is what you're hinting at. Yeah.
Yeah,
So,
and we do talk to them anyway. Jeff talks to them directly in the Chief Auditor forums. So, you know, it's nothing new. We do talk to our colleagues across the boundary.
yeah, no, that would be good, because it would be a sort of a growth factor in the value of the partnership to all of the participants, wouldn't it? Okay, thank you, Andy.
Thanks. And just a question from me to pull back about provider relief. That the situation with GLL came up earlier in the meeting. Andy Rothery was talking about that, and is that, as I understand it, the provider relief comes out of the unearmarked funds from government. Are you doing work on that to kind of look at the process and procedure around the allocation of the provider relief from the unearmarked funds?
Yeah, no, I can't really speak at the moment about specifically GLL and the leisure one, but I mentioned earlier about passenger services. So what we did there was basically there was some discretion in terms of how much supplier relief to provide. That went to Recovery Board and they agreed on a 50% level. And then we got involved to verify the accuracy of the calculations made by our procurement team.
Okay. And would you expect to be involved in that kind of decision going forward?
In terms of the verification and accuracy?
Yeah, the verification of the accuracy of the calculation.
I think it wouldn't necessarily be a normal activity for internal audit to do. It's an activity we can do to provide assurance. And obviously there's strains on resources throughout the authority at the moment. And so we've got to respond to that, which we have done.
Yeah, okay. Anybody else got any questions on the internal audit annual plan?
Before we move on, Chair, can I just also add in about the second part of that paper, which was about the internal audit charter?
Oh, sure. Yeah.
Again, this is to comply with the public sector internal audit standards. And we're required through that to review our charter. I carried out a review of the charter, and that's just resulted in very minor changes, and that was basically as minor as post titles. Okay. But because we've got to do this as part of the public sector audit standards, it's important that we bring that to this committee to provide them assurance that we've reviewed it, we've updated it, and it's really over to the committee just to note that and adopt it.
Sure. So committee members, that's on page 121, I think, of your pack. But just to note that that internal audit charter exists and has been reviewed. Anybody got any questions on that? That's great. In that case, we will move on to the annual report of the audit committee. Jeff, I think this one's you.
Thank you, Chair. I almost got through the meeting without any questions.
Without having to speak at
all. I almost escaped that, almost. Thank you. Yeah, so this is the final item on the agenda today, and it's to highlight the requirement which is set out in the terms of reference of the Corporate Audit Committee, which is obviously it has specific delegated powers given to it from full council, and part of those detail the fact that we need to prepare an annual report back to council on an annual basis, outlining the work of the committee. And at Appendix 1, we've started that report for this particular last 12 months. The report will be presented at the moment provisionally to the November Council. And so it's here today for any comments that members would like to add in terms of the report moving forward. It will clearly be updated following today's meeting. And the proposal is to delegate the report to be signed off by the chair, but also in conjunction with our previous chair, Councillor Furs, because obviously we had a handover during that last 12-month period in terms of the role of the chair of the committee. So that's the proposal sat in front of you, and if any members would like to suggest any particular highlights or issues or amendments, then we're very happy to take those on board so that we can amend the report and update it post the meeting today. So happy to take any comments.
Anybody got, oh, Sophie, following Jeff's presentation. Yeah, you have a comment?
Thank you, Chair. Just have a minor correction to propose on page 132. So that is section C, the external audit, item 2, around the completion of the housing benefit claim. So just the last line says the claim was signed off on the 9th of January 2020 prior to the deadline. Unfortunately, it's not quite true. There were 2 extensions due to technical issues and then compilation issues with the claim. So the claim was actually about 6 weeks after the deadline. Just to note, as a result of COVID-19, the deadline for 2019-20 will be the 31st of January 2021. So that may be of interest.
Thank you.
Thanks for that, Sophie.
Hi.
John, you got a question?
I have a in page 134 on number 4, membership and support. My name seems to have dropped off the committee membership. So.
Quite right, John. We should ensure that that's properly included. I don't know why that happened.
Bracketed as independent member, I guess.
Yes.
Yeah.
Okay.
Yeah, you're not someone that can be easily
not
forgotten, John. So, no.
Okay. All right. Thank you. Yeah.
Has anybody else got any questions or comments about the report? And I guess, is everybody happy for it to be delegated for me and Councillor Furse to sign off?
Yeah, happy to propose that. Yeah.
Lovely. Anybody willing to second? Councillor Simmons got his hand up first. Thank you. I'm assuming from all the nods that we're happy with that rather than going around for a formal vote. Is everybody okay with that? Yeah. Anybody shout if you object, but that's good. Thank you. All right, so Councillor Furse and I will pick that up. If nobody else has anything else on that item, I think we're at a close. So I'd like to thank everybody for attending. Thank anybody who was watching online for paying attention to this. That would be great. And I'll bring the meeting formally to a close now. Thank you very much, folks.
Well, Chair.